Hello everyone, this is Wayne Perspective, a channel dedicated to breaking barriers and sharing perspectives. Thank you all for your attention to the earnings call transcripts from the past week. Starting out, I'll provide a weekly summary of current earnings reports and preview upcoming ones. Thank you for your continued support, and I hope you will like, comment, and subscribe to help me continue these updates. Before beginning today's review, I'd like to apologize first, since I don't know how to edit videos, so please forgive my shipwreck-style videos. Of course, I'm in the process of learning, and hope to produce higher quality videos in the future. Thank you for your understanding. Now let's get to the main topic. This week, several important US companies released their first quarter earnings reports. First is Tesla. Tesla reported after market close on Tuesday. Despite a double miss on expectations, Tesla's stock price surged by 25% this week. Wen believes several factors contributed to this situation. First, the marginal improvement in the trade war situation allowed the overall US stock market to recover from panic. Second, Musk's update on FSD, robotaxi, and robot progress in the earnings report, as well as his commitment to return from the Dodge to focus on company business. Third, unlike in previous corrections, institutions sold more than retail investors during the significant pullback in US stocks, making stocks like Tesla, which are popular among retail investors, more likely to see better returns. 3M also released its earnings report that day, providing valuable calculation on tariff impacts. They mentioned that they typically maintain a 90-day inventory, meaning inventory purchases starting in September 2025 will be affected by tariffs. If Trump can reach favorable overall tariff agreements with various countries after those 90 days, it will certainly benefit companies with sufficient inventory. Wing suggests that when screening manufacturing companies, pay attention to inventory turnover cycles. Companies achieving efficient turnover through zero inventory strategies will obviously face the biggest impact in the current tariff environment. On Wednesday, the high-watched ServiceNow released earnings that exceeded Street expectations. Despite future uncertainties, ServiceNow executives slightly raised their second quarter subscription revenue forecast. Together with SSP's better-than-expected earnings report a day earlier, this provided two reassurances to technology stock investors who have been under pressure. Thursday was undoubtedly about Google and Intel's earnings reports. Google's report was merely adequate, while Intel's lower-than-expected guidance caused its stock to plummet by 6.7%. This sets a not so great tone for next week's series of earnings reports. If CEOs cannot confidently assure investors about their company's ability to handle an uncertain future, investors may vote with their feet and temporarily exit the market. Next week, it's April 28 to May 3rd. May 2nd will be another heavyweight earnings week. So Tuesday, we'll see numerous consumer sector stocks releasing results such as Coca-Cola, Booking, Starbucks, UPS, and Kraft Heinz. Additionally, consumer-linked companies, Visa and PayPal will also release earnings reports. These stock performances and outlooks are particularly important as they provide critical data points for observing whether the U.S. will experience a consumer sector recession. Wing's view is that in the face of uncertain tariff policies, consumer company CEOs will find it difficult to confidently describe future prospects. However, if the companies themselves have excellent fundamentals, the resulting sell-off might present good entry opportunities. Since announcing its CEO change, Starbucks hasn't made many significant moves. How the company will change its marketing strategy and properly handle its China business is worth watching in the earnings report. Wednesday will undoubtedly feature Microsoft and Meta's earnings reports. In the semiconductor sector, Qualcomm will also release earnings, and Caterpillar's report should be noted as well. Thursday, we'll see Apple and Amazon reporting, along with pharmaceutical company Lilly. Popular stock, MSTR, will also report that day. For these tech giant earnings reports, several focus points deserve special attention. As noted by the Market Watch, first, it's the performance guidance, whether they can provide confident performance guidance amid such significant market uncertainty will greatly reflect management's confidence. Second, on the tariff policies, will business and individuals reduce spending? This will be evident from Meta, Apple, and Amazon's report.
Will businesses reduce advertising spend? Will individuals lower their purchasing budget and frequencies? These are most pressing questions facing these giants. And third, will capital expenditure remain at high levels? This is an important basis for examining the future investment intensities in artificial intelligence. And finally, the performance of various cloud vendors and whether they can maintain growth momentum. While these heavyweight earning reports are coming, next Friday's non-farm payroll data is undoubtedly the most important macroeconomic indicator, which also closely monitor Wednesday's ADP employment report and PC indicator that the Fed focuses on most. These indicators, combined with consumer stocks performance guidance, will provide directions for Fed's policy. So are you ready for next week's heavyweight earning week? Please follow the channel and I will prepare detailed contents of earning calls for your reference as quickly as possible. And I would like to emphasize again that the content is for sharing purposes only and not investment or financial advice. Thank you for your attention. See you next week.